પર actually કરતો હોઉં છું.
Okay.
કે ના એ વિડીયોઝ એટલે મૂકતો હોઉં છું એવું બધું હોય છે. તમે મારું YouTube પર જશો ને તો અત્યારે એમને હું જેને ઓળખતો નથી એવા 38 સબસ્ક્રાઇબર્સ છે મારી પાસે.
અચ્છા.
હા એક્ચ્યુઅલી કરતો બસ મને તો YouTube પર લાઈવ તમે બધા દેખાતા થઈ ગયા છો. હું જે બોલું છું સંભળાય છે ને?
હા અહીંયા સંભળાય છે. યસ.
ઓકે બસ એટલે મેં ખાલી YouTube પર મ્યુટ કરે મેં કીધું અહીંયા બી ચેક કરી લઈએ બધું પ્રોપર છે ને નહીં તો તકલીફ ના થઈ જાય. और कितना पार्टिसिपेंट्स अभी और 2 पैनलिस्ट बाकी है ना. जॉइंट सेक्रेटरी
भव्या दी.
हाँ
क्या एक्साइटमेंट हो रही है मुझे, नर्वसनेस.
क्यों नर्वसनेस क्यों?
अरे अक्षय तुम नर्वस हो गए तो हमारा क्या होगा भाई?
अरे नहीं ऐसा नहीं है, बहुत टाइम बाद मिल रहे हैं तो एकदम लग रहा है.
You are in this industry where you know you need to communicate a lot to everybody.
Right.
हमारा तो क्या है कि हम ऑफिस में बैठे काम खत्म हो गया चले गए घर.
Right. Bhavya, if you can hear us, please write on group that sharp at 6 we'll be starting. You know?
तो मैं 6 बजे जितना रिकॉर्डिंग स्टार्ट करता हूँ.
நமக்கு அதுல ஸ்பீடு தெரியல. நல்ல ப்ராப்பரான இதுல போனோம்னா நீங்க ஒரு பிரேக் அடிக்கும் போது தான் இதோட ஸ்பீடு தெரியுது.
Priyanka is also there. Add pin. So कितना है? Hello.
अपने like preferred more language English ही रहेगा, right?
Yes.
और हिंदी?
और mix. Also here. Only us that we have to.
Hello. Hi everyone.
Hi.
Good evening, ma'am.
Good evening. Good to see you all.
हम कैफे में बैठे हो ना?
नहीं यार एक जगह पे मीटिंग में हूँ. I'm outside actually. Hi Priyanka. Hi Amit. Hi Namit.
Hi ma'am.
Hi Ravi Teja.
Hi ma'am. How are you?
Good to see you. Yes.
Yeah.
So guys, you all have worked very hard. Huh? Thank you for taking this initiative. It's a good initiative.
All thanks to Nimit Bhai, Priyanka.
So Nimit, I tried booking for this book, but वो Kindle edition दिख रहा था मुझे तो.
पेपर बैक भी आ गया है. मैंने लिंक भेजा है कि नहीं भेजा है पता नहीं.
I don't know. I tried on one link, but it was Kindle edition. फिर मैंने नहीं देखा है अगर you have shared or not. I don't know. Please share again if possible to me.
I'll share again.
Otherwise, there was the Amit suggestion was right. We'll do a Paytm to you. Give your autograph and stamps. That is best. Author का autograph हो, that gives, we can have that book in our hands. और जाए तो अच्छा लगता है.
Yes.
Yeah.
Like, should we wait for 5 minutes more, ma'am? You went on mute. Acha. Okay. Nimit, Shraddha ma'am.
हो गया. So I think let's wait for 2 minutes more, 2-3 minutes before we start. We should wait for 2-3 minutes. केम छो मयूर भाई? You are on mute. I think somebody needs to. भेजा मैंने आपको.
So currently most of them are on mute. I'll do they can unmute themselves. I have accept.
No, but you put up that way. But I think once you start a session, put everyone on mute. Otherwise, there would be a lot of disturbance. अभी रख दो 2-3 मिनट के लिए open for all. But
so अभी I have kept it open.
Yeah. हाँ. केम छो मयूर भाई?
बस मजा after a long time.
After a long time. So I think these guys have taken this initiative. Good to see.
Yeah, very good initiative.
Yes.
And in the background, I've seen that they have really worked hard to put up the show, getting the material, and forming a panel. This is probably the first time we are having an EDI alumni panel, I think so.
Very true. Very nice. Puri panel hai EDI ki. So that's a
great thing, and we need to commend it.
Yes.
Let me also talk to some people and tell them to join.
Ashish sir, welcome. Still in Dubai or in India?
इधर आ गए.
Okay.
आशीष ने दुबई में एकदम जलवे मतलब थोड़ा बहुत अपडेट मिल रहा था मतलब.
अरे नहीं सर, आपके जैसा नहीं. आप तो ऑल इंडिया.
नहीं इट्स गुड. क्या गिटेक्स में गए थे क्या?
नहीं, गिटेक्स से पहले गया था. गिटेक्स का एक्चुअली पता नहीं था, वरना गिटेक्स वाला ही प्लान करना था.
कोई ईडीआई एलुमनाई ने गिटेक्स में भी स्टॉल लगाया था ना, आई थिंक सो.
पता नहीं.
ओके.
हेलो श्रद्धा मैम.
Hello. Hi, how are you?
I'm doing good. How are you?
I'm good. Good to see you, Ashish. Wow, I'm glad. It's honor for me to have you.
इसलिए स्पेशली आपको आया.
I was looking for you since a year on screen. So today it has happened.
Finally.
Good.
चिल्लाता है.
Very nice. How are you? Doing well?
Yes, all good.
Great.
Yeah, to start or should we
We
wait one
we have
more?
also Jinesh bhai from the first batch, though he's not
Hmm.
speaker, but we have listened to his views and all these things on Lonavala meet. Jinesh bhai, kem cho?
Hey, hi Mayur. What's up?
Fine. Good to see you.
Yeah, same here, guys.
Jinesh Bhai was already a panelist in one of the Entreplus on the go.
Budget
How are
one,
you,
ma'am.
Jinesh?
Budget one.
Yes. How are you, Jinesh Bhai?
Yeah, I'm good here. How are you?
I'm good. Good to see you.
We had a great time in Lonavala. Almost 30 people were there, and it was an excellent event.
Yes. It went very well.
It went very well.
So we look forward to hear some stories now, success stories from you guys. Yes.
Our gym guy is in the car, I think so.
Car.
He's traveling.
Gymming in car also.
He's going to gym.
Like, ma'am, should we start in 1 or 2 minutes?
Yeah. By 6:10 we can start, I think, max.
We can start. Yes, we should start. Yes.
6:10 or 6:07 minutes? No.
Even Rohit is there from the first batch. He is also got into entrepreneurship recently. Is high tech entrepreneurship. We can sometime understand from him the high tech entrepreneurship in IT field, mechanical and IT field.
Palash bhai is still not there, is it?
No,
Palash bhai will join a little later.
Okay.
अक्षय भाई start करें YouTube live पे भी
Yes.
चला के
Yeah, I think we
Yeah,
should
yeah.
start now.
We should start. Yes. Akshay, please.
3, 2, 1, go. Good evening, ladies and see you all back to virtual screen after so long time. And today we have gathered here to discuss something very fantastic. And so I'll tell you the story behind it. A few months back, we all gathered on a WhatsApp group to discuss our common bond for finance and investments. And from there, we got this idea that we should have a session specially dedicated to all the alumni where we'll have finance masterclass. And now we have given it a shape and have named it as FinTalks Season 1. So I welcome all of you here, and it feels great to see so many people from India joining us today. And to make this occasion more special, I now invite Dr. Shraddha Sheth, our advisor to the EDIA committee, to please launch the logo and please declare the session to be open. Nimit, could you please unmute Shraddha ma'am?
Shraddha ma'am should be unmute. कहाँ गए श्रद्धा मैम? है नहीं.
Yeah, she is not being visible in the participant list. I don't know why.
She is visible to me.
Yeah.
Yes. Now I can. Yeah. So hello everyone. It gives me an immense pleasure in launching today's FinTalks first of its kind educational masterclass of ADI Alumni Association. Let me launch the logo of this masterclass series named as FinTalks. I'm very glad to be a part of this launching ceremony. Let me launch first. Yeah, so shall we launch logo? 5, 4, 3, 2, and 1. Yes. Excellent.
Yeah, it's all right.
So we look forward for some claps on the screen at least. Yeah. So friends, I think we are already doing Entreplux on the go since last year. I'm glad that we have started with this series. And I feel also privileged to address the opening ceremony of this first session of FinTalk. I believe that we all know we invest somewhere to ready for the manage the uncertainty of the future, but somehow we also always delayed. This initiative will surely educate us, make us aware about the financial markets and investments. Participants of this program will learn the art of financial management. I believe let's EDI alumni plan for tomorrow and invest wisely. Let me warmly welcome you all on the first series of Fine Talk. I congratulate the entire management organizing committee. I must congratulate and thanks to Akshay for taking this initiative. On behalf of entire committee, I also like to thank Nimit, the author of the recent launch of the book also, Ravi Teja, Amit, Nitish, Priyanka, who are the panelists of today's session. I'm sure we will enjoy today's session and learn, and there would be a lot of takeaway. I also ensure that all the alumni please join for such sessions because it will help all of us to understand. We may this session may give us a lot of takeaway. Your feedback will help us to make it better next series of sessions, and we look forward for your feedback also. So congratulations the entire organizing committee, and look forward for this series to be a successful. Thank you so much. Thank you.
Thank you. Thank you. Thank you so much, ma'am. That was an honor to have you here, launch our logo and declaring this session to be open. So now today we have 5 panelists, and before introducing the panelists, I want to introduce you to the topic that we have for the session 1, that is let's decode the art of financial management. So there will be many topics that are very important from the point of view of finance and investments, from human psychology on spending, savings and investing to like exploring what are the good financial habits, and then gaining the financial strategies and tips from our panelists. So on our first panel, we have Mr. Nimit Brahmbhatt, Mr. Amit Lakhani, Ms. Priyanka Maheshwari, Mr. PV Ravi Teja, as well as Mr. Nitish Desai. So it's all yours, Nimit. Please start.
So, good evening, ladies and gentlemen. Welcome you all. So thank you for coming also. So this session I have planned it based on the ideologies that these investors have, as well as clarifying the concepts that we all have regarding the understanding of the markets, as well as the long-term ideology, the short-term ideology, as well as different investments which we have in physical assets such as gold, real estate, and other things. So this will clarify your doubts. This will give you an ideology. This will make you think and form your ideology, as well as if you have any questions, you can write it in the chat box and Akshay Bhai will be noting it, and we'll be asking those questions to the panelists afterwards. So my first question to the panelists is that we usually have 3 motives of the money. One is the transaction motive, wherein we require money for day-to-day transaction. The second is the savings, and the third is regarding investments that we need to do on speculative basis. So let's talk about savings first. So the first question that comes is how you should be saving and how you should be investing the money that is being saved, as well as what are the things that are kept in mind while savings based on your age. So basically Priyanka is of my age, Amit Bhai and Ravi Bhai are near the same age, Nitesh Bhai is of more older. So what is the ideology that is kept in mind while savings? Please suggest the whole thing based on your age. So Amit Bhai, we'll start with you.
See, based on my age, see, I'll tell you the ideology on how we should go about it. Usually, up till now, or our elders used to believe that if you are earning 100 rupees, you spend 80 rupees and save 20 rupees. Whatever is left after you spend, you should save. But if you really ask me the concept, I would believe that whatever is your earning, first you should keep something aside, which is your pure saving, and that you should calculate based on your age. So if you ask me that the younger people, they should save a little less, because no, they should save a little more and do the investments, while the people who are aged, they will need more money to spend on their medicals and everything. So for them, saving would be, the amount would be little less. This is what I feel.
Ravi bhai, we'll start.
Hi. So coming to the savings part, I feel like it doesn't depend on age. So what my view is, the savings is dependent. But see, ultimately, why we should save? First of all, it is an uncertainty. Tomorrow is uncertain. That's why we will save today. Okay, for ourselves. How much savings you need to do on your income is purely dependent on the number of dependents on your income. If number of dependents are more, then obviously your savings rate should be much more higher than consuming continuously for your experiential things or something. So in my view, age doesn't matter. Savings is must, because even if there are no dependents, at least you are there. So suppose let's say if there is suppose let's say I have the age of 45 and there are no dependents on me, then obviously my savings ratio will be very less and try to enjoy more. So it is a very subjective thing, and the age doesn't matter there.
Priyanka?
I agree with both the parts, but on my end, I feel like savings should be basically for any kind of goals or aspirations that you have in the future. And it should, because if you have the money lying idle in your bank account, you're not beating inflation at any point. And secondly, living paycheck to paycheck is also not something that's viable. So saving should always be there, no matter the dependence, doesn't matter what your age is. You should always save minimum of 10% of your income.
Nitesh bhai?
Yes, good evening all. So in my view, personal finance is all about interplay between earnings, spendings, and saving investments. Right. So we are discussing about saving. So as Amit and Raviteja said, number of dependents on you. So I would rather prefer that saving should be as much as you would be able to cover your next 6 months or 12 months expenses. So having experienced the pandemic, we all now understand it much better that saving or keeping an emergency fund with us is more important. So depending upon the age, we need to have 6 to 12 months of savings, and apart from that, our entire savings should be diverted to investments.
Okay. So as we understand that we need to save, we also need to invest the remaining savings, except keeping the emergency fund. So according to the RBI data, 94% of the Indian households do not have their assets in financial products. Rather, they have it in physical products, that is in physical gold or in real estate or some other products. So what is your individual preference, whether to invest in real estate, whether to invest in gold, whether physical gold or gold bond, ETFs, mutual funds, or directly into equities? So what is your personal opinion, and what ratio do you balance? So Ravi bhai, as you are an RIA, it would be better you start with this question.
Okay. So coming to the diversification part, how much is required? That and all depends on the subjective thing. Again, depends on the risk profile. But personally, what I suggest is if your investment horizon is, let's say, more than 7 years or 8 years, like that, then try to give more exposure to equities. Okay, equity asset class. There are 2-3 advantages here. So the thing is, if you are investing in financial asset, it will be more liquid assets. Actually, you can withdraw that at any time. If you invest in the real estate or something, the liquid part is very much difficult. So if you have a time horizon of more than 7 years, try to be more into the equity. Even if you don't know about anything about equity, go ahead with the index funds, with the benchmark index funds, and invest in that. There are lots of mutual funds where they will have direct relation with passive funds, you can say, directly invest in index. Even if you observe last 20 years past returns, index returns also given more than 14-15% returns. So even if you don't have any knowledge on equity, you can invest in index. Coming to the other diversification parts, if your age is bit high and if you don't have that much risk profile towards the equity, and if your investment horizon is less, then obviously you will go ahead with other products like debt mutual funds or something like that. And obviously physical gold and gold ETFs and gold bonds were also there. So yeah, depends on the age and depends on the risk profile of the person. That's what I can say.
So considering your age, if you are making an investment, what is the ratio that you are balancing?
One more, actually I've given 2-3 variables here. One is age and another is the risk profile of that particular kind, whether you have that much risk appetite or not. Suppose if you have the risk appetite and if you have time horizon of more than 7 years, then obviously 80% will be in equity and remaining in debt mutual funds or gold ETF. Like
Priyanka?
One thing is, I would suggest that gold, if you are going into gold, never go for the ETFs. Always take the tangible form of wealth wherever possible, because metals and whenever it's just that it works on a fractional reserve system. That's a quite complex area to go into. But whenever you are investing in gold, always take the physical form. And secondly, you should always have a diversification of all the kinds of assets in your portfolio. Real estate, when it comes to that, everyone has a form of real estate or FD in their portfolio by default. That's the two pure forms of savings that everyone has to this date. So you should always diversify more into equities if your time horizon is long, as he said. But once the horizon starts getting shorter, once you're getting closer to your goal, you should always shift into the debt market or any fixed return markets so that the savings are intact too. Yeah.
Nitesh bhai?
Yeah, so deciding the asset class would depend on the purpose. What is the purpose? If the purpose is to build wealth or earn higher returns, of course, equity and equity mutual funds are great wealth builders.
Yes.
So, as Priyanka said, that we should be going for a tangible asset if needed. But ultimately, if the purpose is investment returns only, then there are better forms of gold also. We can have gold ETF or even sovereign gold bond, wherein in 8 years of time, you save 20% of your gold investments. So if the ultimate purpose is to consume gold, then it is okay to have a physical gold. But if the purpose is to get returns of gold, then we have better options of gold ETF and sovereign gold bonds.
So Nitesh bhai, can you shed some more light on gold bonds, sovereign gold bonds?
Yeah. So as we all know, we import a lot of gold into India, and we have to spend a lot of forex reserve on it. So government of India has come up with these sovereign gold bond schemes, wherein every 1.5 months they issue a gold bond series where people can invest, get the return, and above that the government of India or RBI will pay 2.5% interest on gold investment every year for the period of 8 years.
Yes.
So is there a lock-in period or something? And if it is there, how does it work?
So there are two things. One can invest through dematerialized form, and that series is listed on NSE and BSE. So if one applies into dematerialized form, then there is no question of lock-in. One can sell the gold units on an exchange. But if it is a physical form, then one has a lock-in of 5 years. After 5 years, one can go for redemption.
Amit bhai, your views?
Yes, SGB, I have also personally invested, but I am of the opinion that I think dematerialized form is also having a lock-in period of 5 years. I'm not very sure.
No.
Okay.
You
okay.
can, once it is listed, you can sell anytime.
Okay. Okay. So I have also personally invested in the SGBs, and even I feel that if you are considering gold as an investment and your time horizon is long, so suppose my son is 10 years old, so I am planning for his marriage. So I don't need the gold right now. I'll be needing it after 15 years. So I'll be definitely investing in the SGBs rather than the physical form. The only disadvantage the SGB has over the physical is that if you are going for the physical means which is not dematerialized, then the lock-in of 5 years is that though then the liquidity is not there. Wherein in the physical gold, you can sell it like this, but the SGB will save you more money because you are getting 2.5% interest. You are saving on the locker cost, because if you buy a physical gold, you have to pay for the locker when you put it in the bank. So it will give you more returns on your investment, the SGB.
And one of the best part of this SGB is it is totally tax-free on maturity.
Yeah.
So Priyanka, you said
Yeah,
that.
I have one thing to add to it. It's just a question. I have never been in this market myself, but all that I know is that if we want investment returns, then SGBs or ETFs and all these kind of vehicles are a good thing. But like you said, that if you want gold like 10 years from now, so I don't think ETFs would be able to provide you the actual form of gold. That is the point, that they don't actually keep the exact amount of gold that you are actually investing in. Like the banks don't have the exact amount of money that you have deposited or taken from them, the fractional reserve system that exists. So the same goes in ETF. So there is a risk over there that you may actually not get the physical form of gold at maturity. So if you want investment returns, these are good. But if you want physical gold in the future, I think there is some kind of a risk. I have never been there, but it's just the statistics that I read.
Yeah, even ETFs, I'm not very sure because I've never looked into it. But SGBs, yes, I know what is there.
Okay.
Ravi bhai, you want to say anything?
No, obviously, if you the thing is, if as people said, we have a time horizon, then obviously SGB is very much good. It is what the thing is, at the maturity, whatever the price of physical gold on that day, that will be the amount which will be redeemed.
Yeah.
Okay. So obviously, normally to my clients, whatever if they have a girl child, I obviously prefer SGB or any, because there are lots of advantages in that. Initially, I will tell 2-3 examples, 2-3 comparisons, which is better. If you go for a physical gold, there will be an GST initially on this thing, and there will be some making charges, etc.
Yeah.
In physical gold, in dematerialized form, if you purchase, RBI will give 50 rupees discount on every gram.
Yeah.
And one more thing is, you can buy in multiples of grams. Okay, 1 gram also can be possible. As an SIP also you can do. In each series, there will be some 10 to 12 series per financial year. So the excess duty is completely exempted and 50 rupees discount from RBI. And as Nitesh Bhai told, at the 8 years maturity, there will be no tax, completely tax free. Whole white money will be generated, without any tax after 8 years. And at that time, after 8 years, if there will be lots of new models in gold. So at the time, you can redeem that at the cost, whatever prevails on that day, and you can go and buy the physical gold. And one more advantage is recently the ICICI Bank, some other banks also, they started giving collateral loans also, like gold loan. If you go on, before it is not there. Now they are giving that as well. So, and 2.5% interest, whichever permitted by gold. So obviously, I think it's very much good to go for SGB than other forms of gold if you have a time watch.
And as far as the taxation is concerned, those who are into higher income tax brackets, getting this tax-free amount is very much beneficial. And the limit for per person, I mean per PAN card per year, is 4 kg of gold. So almost 2 crores of gold one can purchase in sovereign gold bond schemes. This is for individuals, and for non-individuals, it is 8 kg of gold.
So coming to next question, that is on the other asset class, that is the real estate. We have seen many financial influencers and other influencers talking about whether it is good to rent a house or to buy a house. So what is your opinion? That is one of the question of the hour that we see on Instagram, that we have a calculation while they clearly show renting a house is better according to the capital allocation that we make. What is the ideology behind that? That why one should rent a house and not buy a house, and still, according to the data that we have from the RBI, people are buying house. So what do you wish to say on that, Amit bhai?
See, in India, buying a house is more of an emotional quotient. Everybody will think that, okay, I should have a house of my own. But practically, if you ask particularly for my review, that practically speaking, renting is always better, because when you are buying a house, you are deploying a big chunk of capital. And if you are a little financially literate and you can deploy that money somewhere else in which you can get a better return, then it will always be beneficial to rent it out. You can pay your rent out of the returns what you are getting from that capital. But of course, you will not get the appreciation factor of the asset.
Priyanka?
I don't have any experience in real estate. I'm just a bubbling investor at this point. Yeah, but if given a choice, I would always prefer to buy my own house, and it's always emotional. So we cannot always be completely practical about financial planning. Anyone would want one house in their name. It's just something that measures our level of success that we have achieved. So that is one part. And yeah, but I don't know. This is just something that I have heard from my dad, that the house that you stay in is not an investment, it's an expense. So one thing that I talked with him about it was that always save money enough for the margin of your home loan and get the rest amount of money from the banks, and the amount that you were actually going to employ towards your house, you can put it in investing assets, you can put it in bonds, you can put it anywhere where you get better returns. So instead of renting a house versus that, you can actually buy a house and also get money returns on that money that you save.
Ravi bhai?
There are two aspects in this. One is, as Priyanka said, it's an emotion, and the other is an investing part. For me, if you take me as an example, if I feel like it's an emotion, I will buy one house. And for an investment part, people may take it as an investment and some tax saving, home loan tax savings, etc. For that, I think it's a very wrong approach to buy a new house for an investment and tax saving purpose. So instead of, if you think in an investor for investing angle, then buying a house is not at all investing in a real estate asset, especially without land. Normally, people used to buy an apartment like that. That I don't think it's a very good option. And people may think that they are saving tax for the interest and principal, but they can conveniently forget what is the interest expense which they are paying to the banks and the insurance part which they are paying to the banks, etc. Two things: if you are an emotional, you can buy one primary house, and if you are an investor, don't buy the second house. And if you are a core investor, don't invest in any home, rent it and put the amount in much more wealth generating assets like equities.
Nitesh bhai, you are left.
Yeah, very well said, Ravi. As if the decision is rational, then one has to go for a rented house and invest the amount and own the house much bigger at a later stage. But when you are taking a decision emotionally, and given the social pressure and social structure of India, if there is a little bit of saving, there is a pressure for owning the house from the family members or relatives and all. So one has to decide either emotionally or rationally. It is very easy to say that rent the house and buy the house after 15 or 20 years out of that investment. But owning a house, अपना घर, खुद का घर, वो एक जो इंडिया के अंदर कल्चर है, तो वो भी साथ में लेके चलना पड़ता है. So we have to balance the decision. If not needed a bigger house, then you can go for a smaller own house, and then gradually, when you have built wealth, you can go for a bigger house.
So coming to next investment class, that we have an option of REITs coming up in India that was not very soon in India. So recently, few years back, REITs started flowing. Investment ITs also started flowing. So in comparison to equities, many people are also preferring. So what is the yield that is being generated in REITs in comparison to equities? If you have some examples, can you please share it with us? Anyone?
REITs, I'm not very sure, never looked on it.
Normally, there are some mutual funds which they had some discussions, like Parakparik mutual fund. But the thing is, investment in REITs, there is some interest in bigger HNI clients, etc. REIT, real estate investment trust. It is REIT names. HNI class people, they have very much interested, but normally for retail investors, I don't think they are very much interested in REIT. Instead, they are going ahead directly and invest in a real estate asset directly, physical asset like home or real estate. We see one thing: the retail investors purchasing real estate asset, especially homes, etc., because they are availing home loans at very easily. That's why they are purchasing that. Whereas in REIT, instead of paying the EMI, they may invest in REIT as well, but the returns were around. That depends on where that REIT trust is purchasing the assets, like whether they are purchasing commercial, where they are purchasing the apartments, development sites, etc. So normally, I think they will have returns of around 8 to 10% normally. And the thing is, rental yield, if you observe in India, rental yield, especially if you go for real estate, like residential thing, will be roughly around 2.5 to 3%. And in commercial, roughly it will be 5.5 to 6%. So the rental part, and one more thing is not only possessing the assets of this thing, that should be occupied as well. That is also a part in REI. So that depends. Each product will have with different returns. But roughly, I think 8 to 10%, for a long period of time. But comparably, compared with this real estate retail investors which they are purchasing, comparably that will be more liquid assets.
So coming to the next investment class, that is what most of the people might be waiting to hear about. That is equities, where people are trading as well as investing in long term, short term, as well as medium term in the stock markets. So I remember one thing, that the time Rakesh Jhunjhunwala was present in the India Conclave event that happened, he used to specifically say that people should time the market. Rakesh Jhunjhunwala saying this, that people should time the market. So how do you time the market, as well as if you have an opposite view? So what is your view, and what is your thinking behind it? Priyanka?
Timing the market is easy for someone as Rakesh Jhunjhunwala because he knows everything about it. You cannot specifically time the market if you are a budding investor, just like everyone else. You just have to be like, you should just know technical and fundamental, and you can take the stocks that are undervalued. You cannot time when the stock has hit the final low. Like any amount of technical analysis that you do, you cannot find the final bottom at any point. You will have to take investment positions at every low that you get, and then that is how you time the market. You cannot say that this is the final low. Even after so many years of experience, I have seen people saying that, oh no, this is not the final low. So you can buy at every dip and also know when to book profits too at every high. That is how you time it.
So Amit bhai?
See, for me, if you are for the long term, if you are a investor and if you are looking only to the fundamentals of the company, you will not be needing to time the market anytime. So when you feel that okay, the price is good to buy this particular stock, you buy it, and as you are going to hold it for long term, then it will always go up if the company is fundamentally good. So one can never time the market accurately. Yes, if you are doing technical analysis and if you're a trader, then you will obviously study the charts and try to find the bottom, and then enter, and at the upper end of the chart you will try to exit. But that too you cannot time exactly.
Neeraj bhai?
Yes, I am of the view that nobody can predict the markets accurately. And why should one? I mean, it is for traders only to find out what the market would be tomorrow or the day after. If you are investing for a long term, then if economic growth is there, the markets will chase that growth.
Yeah.
So there is no need for long-term investors to time the market. For traders, yes, they need to have some cue where the market is going. So for trading, yes, but it's all a game of probability. So going right in terms of predicting the market, you will earn, or otherwise you will learn.
So Ravi bhai, you have any thoughts?
Yeah, actually, the quoting of quote of Mr. Jhunjhunwala, whatever he told, actually he is a trader as well as an investor. Maybe trader in him is telling that, but as a long-term investor, he never timed the market. So he had the position of a few stocks for more than 10, 15, 20 years as well. Yeah. So don't believe everything what they told. Only thing is you do your own fundamental analysis, and if you are good, if you feel that the company is good and it have a very good growth prospects in the next 5 to 10 years, then stay invested forever. Because I personally know many companies which performed very well even in bear markets, and I know companies which went bankrupt even in a bull market. So don't think that share price is the market. Share price is the company. A company is different and share price is different. Share price will have lots of factors, but ultimately stock price is directly proportional to the company performance if you see the 10-year, 15-year time horizon. So investing is very simple, but following and executing it is very difficult. It looks very simple to time the market as well, but I think it's very much impossible to time the market, even for big traders and bigger people also.
And the biggest investment of Mr. Junjunwala in that he never timed the market.
Yeah.
Right. That is Titan.
So many people ask that when should I start investing? So is it the right time to invest? What price should I invest in? What is a undervalued stock or a cheap stock according to me? And when is it high price? People also say that the PE is very high. Let me share an example. For Adani Green, its PE value went to 1000 and people were still investing in it. So what is it that makes is PE overrated or is it still underrated? So what are your thoughts on it? Ravi bhai, we'll start with you.
Yeah. Personally, I feel this PE ratio is a useless thing. Okay. See, what people should see is the company, what is the management, what is their growth potential in the next 5 to 10 years. Don't consider these as any advice. If I take some examples of any companies, in Gujarat-based company, I invested in Deepak Nitrite in 2018. At that time, PE is around 60, 70. Normally, the people who follow the PE ratio, people used to tell that if it is more than 15 or 20, don't buy the stock. But at that time, it is 60. Now, the PE ratio came down to 15, 20 like that. Because EPS, PE ratio is nothing but price to earnings potential. If earnings denominator is increasing, obviously PE ratio will come down. Only thing is you have to keep an eye on whether EPS, generating EPS by the companies, they have the capabilities or not. And normally I used to see the intrinsic value of a company when I'm checking the valuation of the company. Calculating this intrinsic value is very difficult and very subjective thing as well to give the thing. If intrinsic value and if the future value, whatever we thought is convenient to me and with respect to the valuation, we will invest. Otherwise, we don't see all this PE ratio.
So coming
PB
to
ratio is also very much baseless. Normally, people used to see price to earning ratio and price to book value. Suppose if a company where have the dividend policy, where they have the dividend policy of 60%, whatever they generate EPS in EPS per year, if they have a dividend policy of giving that EPS of 60% as dividend, then obviously book value will be very low. But companies making EPS, profits, cash flow. That one more thing is cash flows is very much important, whether they are making cash or not. Many companies used to show the profits, but cash flows may have in different the business. That depends on each business, but cash flows is very much important. So if in that case, that highly dividend-oriented companies, book value will be very low and PB value will be very high. So these ratios are not that much important. See the management and see the intrinsic value and valuations and tap the opportunity.
Priyanka?
Intrinsic valuation is quite a complex process to go through, but if we are even looking at a PE, it's a double-edged sword. That if the company has a low PE, that there is a possibility that their price has also dipped. So it's always better to check why the current PE valuation is there. And secondly, about the company's management, its own industry. Today, Nestle or Pidilite, they are market leaders of their in their own industry. So whatever their PE ratio is, it doesn't matter. They can command any valuation they want because they have no other competitors in that industry. Secondly, you should always break down the current PE levels, see if their EPS is rising also. So it should always be seen as a way of filtering the companies that you want to see. But in the end, you have to look at other parameters like debt to equity, ROC, ROE, and all that other things. And secondly, your question about Adani Green, that why people are actually investing in it is because news, herd behavior. People know that Adani stocks are going to go up till the next 1 year or so. So people are following smart money. That's it. There is no other reason why it can command the amount of interest that it is getting now if people were actually rational enough to invest fundamentally.
Amit bhai?
See, for me, a PE ratio, okay, you can judge a company a little bit, but I feel you should always look for the balance sheets and profit and loss, the top line and bottom line. That will give you a much more clear idea about how the company is performing rather than looking to these ratios. So I always look to the complete picture rather than going only for the ratios. And again, in the case of Adani Green, suppose it is banking a lot more on the future prospects in the field they are in. So that is why, the price is also jumping. And basically, older companies which are older, they used to work in a very conventional industries. Now the industries are also evolving heavily. So this ratio fluctuations will be there always. But you should always look to the complete picture while analyzing the company.
Nitesh bhai?
Yeah, I agree with all of you. PE ratio is one of the factors while we are selecting on a company to invest. So no pilot will start flying before going through the checklist, however experienced he is. So we need to have our own checklist. Like Ravi Teja said, cash flow, positive cash flow generation is much more important than price to earnings ratio. Because a PE ratio can misguide us all. A higher PE ratio does not mean that we should not invest into a company, or a lower PE ratio does not mean that we should invest. Because some of the good companies in India are always expensive. But still, if you invest in those companies, you earn a higher return because they become more and more expensive. For example, HDFC Bank, if you track the HDFC Bank for the last 10 years, 15 years, it is on a growth path. So on whatever price you bought HDFC Bank, you have made returns. So only deciding whether to invest in a company through PE ratio is not sufficient. We need to have a complete picture of a company, the business model, the quality of the management, product or services, and all that. And given that homework, one should decide that whether he would be investing in this company or not.
So keeping the PE ratio aside, so there is the first question which I asked. Majority of the investors lose returns because they are waiting for a dip or a correction. So when should one start?
As early as possible.
At every dip.
So the best day to invest in Indian markets was 20 years earlier. And the next best is today.
Yes, correct.
Ravi bhai?
Same, immediately. Whatever, that depends on your goals and investment horizon again. If you have more than 7 years or 8 years investment horizon, these type of small corrections, whichever you are expecting, it doesn't matter much.
So having a long-term view and investing at any given point of time, even if I say I invest in today. So if I have a long-term view, it is okay to not look into the share price and all, but rather investing.
Look at your share prices when the market is in correction. Just try to employ as much capital as you can and then look at it after 3 years.
Best thing is to follow SIP mode. if you are investing in equities or equity mutual funds. If you are a one-time investor, then try to make it as at least 50% of your investment should be in investments at any cost, irrespective of whatever the market conditions were. And you may time the market with another 50%. And I'm pretty sure that you can't time the market. So whenever you have the dip, then they should have some cash power to deploy some more. But yeah, in that way you can do.
Yeah. So to get the best of the both sides, whether upside or downside, as Ravi Teja said, one should balance the portfolio. And since I am into mutual funds, I would suggest that if you don't have that time to rebalance the portfolio frequently, you can go for hybrid funds, wherein this process automatically takes care of upper market and lower markets. When market is high, the automatic profit booking is done. When market is low, automatic debt to equity transfer is done. So I have seen for the last 10 years or 15 years, when you compare the hybrid funds returns and equity funds return, it is almost the same. So with lower exposure to equities, you get higher returns.
So there's another thing that people, even though they have long-term views, they still get diverted from their investments. So there is certain kind of emergency which might come, a blue swan event like COVID, where people, even though might have saved, still have less money. So how much should one save? Even though we have said it in percentages, we have seen that even the savings as a percentage is also less. So what is the minimum amount that one should keep aside, considering the EDI alumni, which they might be earning based on that median earnings? What should be the minimum amount they should keep aside?
Minimum amount should be whatever you are earning in 1 month. It should be 6 times. That should be the minimum amount what you should have in your savings or any liquid thing which you can redeem immediately when you want. Not necessarily it should be in your savings account, because it will not give you high returns, but any liquid funds or anything which you can redeem immediately.
So there are few things that are happening in India. So
One
other
thing
than
I wanted to add to that,
Yeah.
whichever you tell, of course, emergency corpus, whichever Amitai told, is very much important. 6 months, but the basic thing which anybody must possess is normally these type of uncertainties and emergency expenses will come in the form of health or some person's critical health or the expiry of a product person. So both must have health and life insurance must. Before maintaining the emergency corpus itself, they should have these two things where the uncertainty can be overcome. And of course, the 6 months expense, whichever is there, that also will suffice to not to disturb these investments.
So talking about insurance, we have only 3% penetration overall in India, considering the total insurance market that is there. What should be the amount of insurance that you should have as cover? Because even having more is useless and having less is also useless. So what is the adequate amount of insurance that one should have? And whether he should have insurance from 2 or 3 companies, or is it okay to just go for one? Nitesh bhai.
Yeah. So in terms of protection, I have outlined 5 things. And since we were talking about the emergency fund, the savings, so if we have the 360-degree protection, we might not need those emergency funds. So in terms of protection, the number 1 thing is one should have sufficient term insurance. Then one should have sufficient health insurance. one should have sufficient personal accident insurance, then property insurance, and all vehicles insurance. So if you have this 360-degree protection, chances are less that you need to spend those emergency funds or emergency savings. So when we talk about the term insurance, we need to calculate, there is a theory called human life value, or roughly the thumb rule is 20 times of your annual income should be your term insurance risk cover.
Okay, anyone want to add up to this?
See, in the insurance part, I would like to add, still in India, term insurance is not sold heavily, and probably the bankers or the agents of them, they do not promote also. And I know the reason, because they don't get heavy commissions on that, particularly on the term insurance part. But if you want to take insurance, see, the basic motive of the insurance is if something happens to me, my family should be getting something on which they can live their life. So for life insurance, nothing but the term insurance will work. And see, I have also invested in LIC. My father told that, okay, we will invest in LIC, then your life is covered. But if you look at the returns of the LIC, it will never be more than 7%, roughly. So for life insurance, I would only suggest term insurance to take. And you should always separate the insurance part and the investment part. What we usually do is, when we take an LIC, it is insurance plus investment. We always think that way. But I would suggest that going for a life insurance, you only take the term insurance. Again, Mediclaim and personal insurance, personal accident policies are the top-ups, what you can have along with it. That is my take.
Anyone
Normally,
else?
we used to say that how much you asked about how much term insurance is required for the thing. More it is not useful unless it is not sufficient. So normally, what we use is in your absence, whatever your annual salary is, that into 10 times. Normally, in developed countries, this insurance coverage will be 20 times of your annual salary. But that much amount may not be possible for us, depending considering the premiums. This thing. So normally we suggest like at least 10 times of your annual salary, annual income is must for your term insurance, life insurance coverage.
And plus, if you calculate the amount you are spending on the term insurance, it will be very less compared to what you are giving to other asset classes for your insurance purpose.
And selecting the insurance company for these insurance is also very much important. There are lots of companies which will give at very low price, but I don't think they will sustain for. See, if you are taking, in the health insurance, the advantage is you can shift in any time. I mean, after the contract will be between you and that company will be for 1 year or 2 years, and after that you can change. But life is not like that. Life will have the tenure of around, depending on your coverage, 30 years or 25 years or 30, 35, like that. So you try to select a standard company while selecting the insurance, life insurance.
Anyone else would like to add anything? So I'll move ahead.
So, yes, one line I would like to add in terms of insurance, though the popularity is gaining in terms of term insurance, many of the people are of the view that we will take it later. But the golden rule of taking an insurance is you should buy insurance when it is not needed.
Yeah. And particularly for term insurance, it would be best if you can take as early as possible, because you will be in your good health. So the premium would also be comparatively less, and you can get the same amount of cover if you take, suppose Akshay is 26, 27, and if he's earning right now, so he can take a cover of say 50 lakhs. So he'll have to pay a premium of around 25-30,000 rupees a year. But if the same cover, if he takes when he's 36, 38, then probably this premium amount will go to around 50,000, 60,000 rupees.
So, coming to the next question, do you have any questions that a new investor need to ask themselves in order to understand their risk appetite, whether equities is better for them, whether mutual funds is better for them, either to directly invest in equities or do even SIPs in equity? So is there or are there any questions that one need to ask for self-analysis? Priyanka?
Uh, it's a tricky one. One should actually, the first thing about equity is that if that amount of money that you're investing actually goes to zero at some point, will you be okay with it? Is it okay that do you have the capacity to cover it right now? Are you earning enough? So only then and then you should go for equities. It is not always going to give you multi-bagger returns. There are certain companies that will close down. So if your entire savings, entire value that you're investing currently in equity, if you have the capacity to stomach the part that it is going to go to zero at some point, only then and then go for equities. It has a downside risk.
Roy bhai?
Best thing, instead of question, my best suggestion is go and consult a good financial advisor so that he can take care of all these because it's very much difficult to explain what are all the things they should consider, even though if we tell many things, but there are lots of subjective things to them which specifically applies to them. So there is no such type of golden rule. How much is they should allocate to each.
So Amit bhai?
Yes, it will depend. You should always ask the question, what is your risk appetite, and how long you want to be, in the investment part. And I would suggest that if you are not very knowledgeable about the direct equity market, it is always best to go for the mutual funds and do a religious SIP. And SIP will always give you returns. Usually what people do is they do an SIP, and after 3 months, 4 months, they look at their portfolio. It is not growing. So eventually they will stop after 6 months, 8 months, that, okay, we are not getting any returns, why to invest? But SIP is always for a longer term. So if you religiously follow the SIP method, you will always get returns. Yes, if you are knowledgeable about the equity market, you know the fundamental readings, you know something about the technical analysis, direct equity is a good option. But again, as Priyanka said, you should have the jigger to lose all the money, because it will not guarantee the returns. Of course, one safer way to invest in direct equity is take the number 1 and number 2 in every industry and invest in that company. Suppose if you are investing in banking sector, you take HDFC and ICICI or SBI, and you invest. You can also do SIP in equities. When you decide, okay, I will invest 2,000 rupees in banking sector every month, so you can choose stocks and invest in them. And you can also use small case. Small case is a good option. I have never used, but small case gives you the basket of different themes, different sectors. So you can use that and do SIP in equities also.
Nitesh bhai?
Yeah, I agree with that. So the question is whether one should directly go to the stock market and manage his or her portfolio, or one should go to the mutual funds, wherein professional management is there, who is taking care of the portfolio construction and rebalancing and all that. So it depends on one's profession, whether one gets time for research and to connect with the market frequently, to look at the portfolio rebalancing and all that. If one can do this professionally, then one can go directly to the stock market. Otherwise, the best thing is to go for the mutual funds. Even in mutual funds, they have now option for the direct plans, wherein they can save commission part. So if they are not having enough time and research skills of the selection of the companies, then they should go for the mutual fund part.
So considering we are talking about investing in equities, there is also our portfolio that we have. Some people say that it should be only 10 companies we should have in portfolio. Some are investing in 20, 25 companies, and some are investing in more than that, like 50 companies and all, and still generating returns. So what is your take on it?
So on a lighter note, you should have as many kids as you can manage.
Yeah.
Same goes with the number of companies one should have in the portfolio.
So what is your personal portfolio company's number that you have in your portfolio?
So
Do
as
you
of
have 10 companies, or do you have more than 20 or 50 companies?
So as of now, I have 48 companies in my equity portfolio.
Okay.
Even I have more than 30, but few goof ups are there. So I will get rid of them soon.
Yeah, I have 25.
My watch list have around 40 to 45 companies, but I invest only in 12 companies.
Invest only in
12
companies.
companies.
12 companies.
Yeah. But as Nitesh Bhai said, it is very true that one should have the time to analyze all the companies in the portfolio. If you cannot analyze all the companies in your portfolio, somewhere you will lose the money.
So if someone is directly investing into equities, it is better to have less companies so that you
Yes.
can thoroughly analyze.
Yeah.
So there are few sectors which are utilities. There are few sectors which are growing, such as new age industries, wherein renewables are growing. Some, even though companies which invest in physical assets do not grow, such as, if I talk about an example, telecom sector, except Bharti Airtel or some other companies have not generated returns for their shareholders. So which are the sectors you personally invest in or look upon, and which are the sectors you avoid?
So personally, my portfolio, if I look at it, I'm skewed towards, my portfolio is skewed towards banking and financial sector and information and technology sector. So most of my portfolio is skewed towards these two sectors. And the reason being, when the economic growth is there, banking and financial sector is the backbone working for the growth of the economy. And information and technology, this is the new age of IT. So it is going to remain there and grow.
Priyanka?
Market does work in cycles. So this is how you time it, that at every time there is a dip in the market or everyone is very pessimistic about it, there is a turn in sectors that will be bullish for the next cycle. So always try to go for companies that are going to run the next cycle. So of course, the companies that underperformed in the previous one, the sectors or industries that underperformed in the previous cycles, will definitely get a boost in the upcoming one. So always skew your portfolio towards that.
Amit bhai?
I have personally not categorized my portfolio, but I look at the companies which are performing good and which I try to find the companies which can generate good returns in the future, looking to the industry what they are in, and looking to the management and overall financials, and I select that company.
And Ravi bhai?
That's it. Just like Amit bhai, normally I don't prefer to go in particular one sector. Normally I search for fundamental analysis and bottom up analysis. So we will see the company first. So I don't specifically invest as per this type of sectors based investing.
Because I'll just give you an example. If you are, reviewing sectoral thing, if you consider the IT sector right now, it is on a bearish mode. It is going down. Almost all the companies.
Yeah.
Wipro is almost available at 50% of the cost from the all-time highs. So you should look for when this sector is going to turn around, as Priyanka said, and if you enter that company at that point, then for a medium term you will get handsome returns.
So there's one last question from my side. Considering the past 1 year, we have seen war, we have seen in the past 2 years, we have seen COVID, and we are facing supply side issues. We are having news that US might go into recession, UK might go into recession, as well as we are having supply chain crisis. So what is your suggestion to a new age investor or an investor who is starting right now to do at this point of time? Ravi bhai?
Get ready with cash, buy in all dips, and stay invested. Even after you invested, even if it falls by another 30%, don't fear. And as I said, if you have a confident on company and if you're fundamentally strong, you can invest. Otherwise, if you don't have any knowledge like that, go and invest in index-based passive mutual funds and stay invested for next 5 to 10 years.
Priyanka?
Always remember, this has happened in history at some point, and every time that you feel the world is ending, try to get as much cash as you can and invest in the markets, because somehow, some way or the other, it's going to end at some point.
Amit bhai?
If you are a long-term investor, you should not fear at all. The best way to invest is today. उसके बाद अगर market 20% भी गिरता है, then you should invest more, because that is how you generate good returns.
And Nitesh bhai?
So historically, if we see that Sensex began with 100 in 1979. And in 1993, people were thinking that market is overvalued at 3,000 points. In 2000 also, people were thinking that market was overvalued at 6,000 points. In 2008 also, people were thinking that market is overvalued at 21,000 points. And today also, if one is starting to invest, they'll think that market is overvalued. But looking down 10 years down the line, market is cheap today.
So,
as Nitesh bhai told, normally we should invest by seeing the future, not by seeing the past. If I say the example of what Nitesh bhai told in 2008, in January, February, Sensex is at around 21,000. And by November, it came to 8,000 because of the Lehman crisis and subprime crisis, etc. But if you see today, the people whoever were invested at January 2008 and people who were invested in September or October 2008, both will be very much positive. It's like that. Yeah.
So that's all from my side. Thank you for answering my questions. And I'll hand it over to Akshay bhai. Akshay bhai, on to you.
So that was like a mind-boggling discussion. The topics like ranged so many like themes, and it was really superb to know the wisdom that you all were sharing. So now for the next 5 to 10 minutes, let's keep the session open. Then we'll invite Palash bhai.
Okay.
If anyone wants to ask a question, please go ahead. Mayur sir.
First of all, I want to compliment for such a beautiful discussion covering a lot of points because, having spent 15 years in personal finance advisory industry, this was one of very, very good arranged session. And yeah, everything cannot be covered in one session, but it's a very good start. And in last, what Ravi Teja said that, during the Lehman clash, the people who have invested before the crash and the people who have invested during the crash, if you see after 15 years, their return on investment will not be much vary. If you are a long-term investor, timing the market can be a time-consuming activity where you will spend a lot of energy, but end of the day you may not see the result over a long term. On that note, I want to share a small event which I was witness to. I was in a party once upon a time, on a, with legendary investor, Mr. Junjunwala, after he had delivered a session and, over the cocktail party, with a glass in his hand, we were having a discussion. And one of the lady, who barged and, asking her that, sir, can you suggest the name of the script should I invest into? So, Junjunwala said, ma'am, whatever script you feel comfortable, you invest into that. That lady came again and again. So Mr. Junjunwala said to her that even if I tell which script I am investing, you will still not make the money because you never know when I will exit that script.
Correct.
So, timing the market goes in both the way, when to enter and when to exit. And if you don't know, and if you don't have time, find out a trusted advisor and let him do the timing, the market work for you.
I'll add one more thing here. I written one article on what are the factors you should consider while following a successful investor and whether you should follow or not. The people who were asking the scripts like that, they should read the article once. I will share and if they can take follow.
So are there any questions from the audience or shall we close the session?
We have Jinesh Bhai. We can have some words of wisdom from Jinesh Bhai.
Dinesh bhai has left.
Maybe he has left.
Yes, I think Rohit has some question.
Someone raised a hand.
Yeah, can I ask?
Yeah, please go ahead.
Yeah. See, I have a question. See, of course, you got to buy insurance very early in life so that it's less costlier. But then at that time, 10 times your salary probably is 1 crore at that point. But today, when you are, say, 40, 45 plus, the 1 crore is not going to cover anything. Compared to, suppose if the person demise is there who's earning, and the 1 crore, because the inflation has increased so much that it doesn't cover much. So at 45 or later in life, how do you manage to take additional cover, which indeed is going to be very expensive? Is there any way to reduce the cost of that by saying a limited term, at least till retirement? Because you need insurance till you retire, or at least a few years after retiring, unless you have met all your goals. So how do you plan buying the second line of insurance, life insurance, because the inflation has increased and you still need a cover?
Can I answer that?
Yeah, please.
Yeah, what Mr. Rohit told is 100% correct, the inflation part, etc. See, normally insurance should take only if you have any dependents and till you have a dependent on you. Suppose if your kids and all were very much independent and they are not dependent on you, you don't need any dependents. Okay, and as Nitesh Bhai told in the initial when discussing about the insurance, human life value, whatever the calculation part will be there. So people should, they should consider and they should calculate that at the real time. Even if you take the insurance, later part also they should consider checking that HLV, human life value, and at that time you will get to know whether the insurance is whichever you took before is sufficient enough or not. If it is not sufficient, you should have to take a fresh policy or a fresh thing to cover all that this thing. Why we take 10 times of that means in your absence, at least your dependent should be safe for at least 10 years. That is what the concept is, as idea is. And human life value should be considered dynamically every year at the time of renewal. And as in IRD, as per rules, you can take insurance coverage up to 25 times, depending on your income. So there is no problem. You can take, but of course, premium will be high. That we can't do it.
And that is why, see, apart from the insurance part, that is why investing is important to, cover your future expenses.
Yeah, I get in the investment part aspect.
Yeah.
I hope we cleared your query.
Yeah, I mean, it's still hazy in terms whether you should really pick up. It depends on how much cash you have, how much investment you have, and sometimes it might be just an expense because nothing might happen. I mean, of course, COVID has happened, but it's investments should stand out, as Amit said, as a alibi for lack of insurance as you grow over the age, because and I fully agree with Ravi Teja. It depends completely on the goals that you have set. If you're done with all your goals in terms of responsibilities, I think you don't need it as much. That's it for me. Thank you, guys.
I have a question to Priyanka and Nimit. So Priyanka and Nimit, you are also you also started while you were at EDI, right? In your final year or after that. So of course you were particularly focused into going into investing, trading and markets. And what about those people who are just new in our age? Should they be understanding first fundamental, or should they be going for the fund managers?
You should understand both of them while going. If you want to go for the direct route, directly going for the investing, then you should learn what is fundamental first, and then you should actually get into the technicals. But yeah, fundamental analysis should be the first part if you're going for direct investing.
Akshay, what the thing is, in this case, we can't tell when you're ready to go into direct equity. Okay. Suppose I will tell you one example. Suppose if you have a book, okay, and that book has around, let's say, in ideal case, I will tell. Suppose that book has around 100 pages. If you read 10 pages, it means that you have 10% of knowledge of that book. Suppose if you read 50 pages, you have 50% of knowledge. Suppose if the book pages are not defined and it is infinite, then how can you say that how much knowledge is sufficient you have? The person who is in 200th page know that you are in 10th page, and someone in 2000 page will know that I am in 200. So it is a continuous process. So we can't tell when you are ready to invest in direct equities. It is completely subjective thing. If you are confident, you can go on it. It is completely fine.
Like mix of both, right?
Yeah.
See, I would always, your question was how one should start, right?
Right, sir.
When you start earning, the best way to start would be to catch a mutual fund and start an SIP, because then your primary focus when you start earning would be to get a experience on your industry in which you are working. So you will not be able to give so much of time to direct equities. So first thing of investment side would be to get a good mutual fund and start an SIP on that. Of course, in that mutual fund thing, you can select a sector in accordance to your mutual fund manager or whosoever you are consulting, and start an SIP in that. Once you are, getting some free time from your work, you can study the fundamentals and you can look to the equity market. And after studying the fundamentals, then you can enter the direct equity market.
Right. Perfect.
Amit, audible.
So my first, as I started during EDI, so my first opinion would be to go into mutual funds and look for the fund manager with whom I share the same ideology, or read certain news and how they talk and what is their investment ideology, and invest with that particular mutual fund manager. And the second thing that I'll be start learning regarding the equities, the first thing I would understand even in equities is the sector which I'm in doing business in. So probably I'll start looking with the first sector that I am into business with, whether it is good to be a supplier of that sector, or whether it is good to be in that main particular business. So if I talk an example about it, so it is better to be Boeing rather than Indigo Aviation. So that's my viewpoint. You can start with mutual fund, you learn, then you discover many other sectors, you take knowledge from other people, have an ideology formed, and then start investing into equities.
Right. It's open to everyone. Like if anyone wants to, then they can unmute themselves and ask. Mukti ma'am, Sanjay sir, Siddharth bhai, Viplav bhai, Bhavik bhai. Are they able to unmute themselves, Nimit?
Yes.
Could you please unmute everyone? So yes, everyone can unmute themselves and ask, or else we shall invite Palash bhai and we'll close the session.
I just want to congratulate all of you. It is really very informative session और कई सारी चीजें थी जिसमें डाउट्स क्लियर हुए, क्योंकि सभी नए होते हैं तो कंफ्यूजन रहता है कब शुरू करें, क्या यही राइट टाइम है. और रियली आई एंजॉयड इट थोरली. और पिक्चर के कुछ डायलॉग है जो मेरे जीवन में मैंने रखे थे स्टॉक मार्केट के लिए, तो हर बार जब डीप आता है और अप जाता है तो मैं सोचती हूँ पिक्चर अभी बाकी है मेरे दोस्त. जब लोग बात करते हैं कि ये जो भी हमने आगे बात की कि वॉर हुआ या कुछ भी हो, पर आप थ्रू आउट मार्केट को देखोगे, इंडियन मार्केट कभी रुका नहीं है. इफ यू आर इन्वेस्टिंग लॉन्ग टर्म तो डेफिनेटली यू आर गेनिंग. और जैसे आप सब लोगों ने बताया कि जैसे भी आप कमाना शुरू करें, स्टार्ट थोड़ा सा फंड भी म्यूचुअल फंड SIP. सो रियल इंफॉर्मेटिव. आई थिंक ये हमारे टाइम पे उस टाइम पे होना चाहिए था, क्योंकि अभी जब बैचेस की बात कर रहे हैं तो मुझे लगता है हम पुराने जमाने के जेलर है जैसा फील होता है कई बार. सो इट इज रियली वंडरफुल एक्सपीरियंस. और जितने रेशियोज की बात हुई है तो एक्चुअली वो भी हम जानना चाहेंगे, वो सीखना चाहेंगे कि कैसे स्टडी करना चाहिए. सो वो भी एक कंसर्न था कि ऐसा भी कुछ टॉपिक रखे जिससे ये रेशियोज भी हमें पता चले. और
प्लीज
हाँ और रियली मुझे इतना मजा आया. और प्रियंका, रियली हैट्स ऑफ यू इतनी कम उम्र में the knowledge you are sharing and the way your thoughts are really it's like great life ahead for you. और बहुत मजा आया, मैं फर्स्ट टाइम सबसे मिली, पर रियली मेरे काफी सारे कॉन्सेप्ट्स क्लियर हुए, काफी सारे डाउट्स भी क्लियर हुए, और मैं देखती हूँ कि अभी आगे और सीखने को मिले. इट्स रियली ग्रेट. और कॉन्ग्रेचुलेशन अक्षय, बहुत आपने मेहनत की है इसके पीछे भी. सो ऑल ऑफ यू, थैंक यू सो मच फॉर दिस वंडरफुल सेशन.
और लास्ट में मैं दो बातें कहना चाहता हूँ. एक, अपने बिजनेस में भी आप जिस फील्ड में एंटरप्रेन्योरशिप कर रहे हैं उसमें भी इन्वेस्टमेंट करना ना भूलिए. बिकॉज ये सब सुन के ऐसा लगेगा कि हमारा पूरा हम वहीं इन्वेस्ट करते हैं और बैठ के आराम से रिलैक्स करते हैं. सो उसको मत भूल जाइए. अदरवाइज लेट अस नॉट एवरीबॉडी ट्राई टू बी झुनझुन और सो डू योर बिजनेस ऑल्सो. And second thing, there is a very good WhatsApp group, run by Akshay, EDI Stocks. So जो उसके member नहीं है, वो अक्षय से जानकारी लेके उस WhatsApp group में join कर ले. A lot of discussion happens on that group, and I came to know, a lot of people are investing